are going to present about the basic conceptual and regulatory framework in Malaysia. The conceptual framework of accounting mentions the underlying assumption of going concern, accounting entity concept, accrual concept, time period, and monetary unit assumption in preparing and interpreting financial statement. First, my name is Sharifah Amira, and I'm going to present about the accounting entity concept. The accounting entity concept recognizes a specific business enterprise as one accounting entity, separate and distinct from owners, managers, and employees of that business. In other words, it means that a company has its own identity set apart from its owner or anyone else. Personal transaction of the owner must not be mixed with the transaction of the company. The example is if the ABC company buys a vehicle to be used as a delivery equipment, then it is considered as a transaction of a business entity. However, if Mr. A, owner of ABC company, buys a car for personal use using his money, that transaction is not recorded in the company's accounting system because it is clearly not the transactions of the company.
Alright, second accounting process, book of original entry, which is journalizing, is matching with the accounting entity concept because the transaction will be classified and recorded in appropriate books of prime entry.
Hello, my name is Rachel Edward and I will present about the second basic conceptual, which is going concern assumption, known as continuity assumption. This concept assumes that a business is a going concern that will continue to operate in the foreseeable future, using its asset to carry on its operation and with the exception of merchandise not offering the assets for sale. In other words, the business operates in long lifetime, which is enough to fulfill its objective and commitment. For example, the small company is unable to make payment to its creditor due to very weak liquidity position. The court grants the order to liquidating the company upon the request of one of the company's creditors. The company is no longer a going concern because sufficient evidence is available to believe that the company cannot continue its operation in future. However, in the accounting process, going concern concept is the one of depreciating is based on the idea that businesses will continue to operate well into the future. If we disregard the going concern and assume the business could be closed within the next year, assets would be recorded at net realizable values and all assets would be considered current assets such as cash, bank, and so on rather than being segregated into current and long-term categories. Thank you, that's all.
My name is Asmira. I'm going to present the third basic conceptual of accounting process, which is the accrual concept. The accrual concept of accounting means that revenue or income is recognized when earned regardless of when received and expenses are recognized of when incurred regardless of when paid. Hence, income is not the same as cash collection and expenses is different from cash payment occur regardless of when the amounts are received or paid. Statement of comprehensive income accrued should be added either at revenue or expenses. In statement of financial position, accrued expenses should be recorded in current liabilities and accrued revenue should be recorded in current assets.
My name is Izarina. Next, I will present about the time period in accounting. The time period assumption, also known as periodicity assumption, means that the indefinite life of an enterprise is subdivided into time periods, which are usually of equal length for the purpose of preparing financial reports on financial position, performance, and cash flows. For example, let's assume that Janet selects March 31st as her fiscal year end. She will report all activity for her business from April 1st to March 31st of the next year in her financial statements. Under time period assumption, we prepare financial statements quarterly, half-yearly, or annually. The income statement provides us an insight into the performance of the company for a period of time. The balance sheet, also known as the statement of financial position, provides us a snapshot of the business financial position, such as assets, liability, and equity, at the end of the time period.
My name is Rachel. Now I'm going to present about the fifth concept of basic conceptuals. That is the monetary unit assumptions. The monetary unit assumptions has two characteristics that are quantifiability and stability of the currency. Quantifiability means the record should be stated in terms of money, usually in the currency of country where the financial statements are prepared. While the stability of dollars, as known as stable dollars concept, means that purchases power, that any insignificant effect of inflation is ignored. So it is to be noted. However, the financial statement of the company reporting in the currency of hyperinflationary economy or an economy with every high inflation rate must be restated in accordance with applicable accounting standards. As example, modern furniture on a factory that have acquired in 1952, along with the surrounding land, the acquisitions cost was $3,000. It is new work with a greater continues to be valued as its original cost in the company's books of accounts. That's because according to the monetary unit assumptions, its values cannot be increased to take inflations into the account.